Welcome, everybody, to the Chinchilla Pickin' Podcast. It is October 22nd, 2023 at 3:40 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only Baron of Bonds, Brandon Beaver. Brandon, how are you?
Good. How about you?
I am doing well. I'm doing very well. If you don't know, if you're listening to right now, you don't know why does he always say the date and time on these shows? Well, stocks and investments are very date and time specific. So I could give advice this week on, say, a particular stock, but then geopolitical events could happen and a different country bombs a supply chain somewhere else, and all of a sudden that stock drops. Well, that matters because I gave my advice on this particular company and stock at this time before those events happened. So it all matters. And that's why we give the date and time so that you understand when we're talking about this in reflection to what's going on at that moment. Right. So I just wanted to reiterate that. But Brandon, how are you doing, man? It's October, almost Halloween.
And when we first started this show, we did a decent amount of kind of like timeless advice podcasts, like teaching and things like that. Maybe we should get back into that a little bit. Because I do see a lot of times, honestly, most of our listens that come to our podcast, it seems like are not for the most recent episode. Most people that go listen, this is something that was unexpected to me, but most people that come and listen to us, they go and listen to prior episodes, and it's probably based on companies that are mentioned in the title or in the description. But maybe we should go a little bit back towards that, but I don't know.
I feel like we do. I feel like we define some of the things we're talking about as we go through the podcast. We're like, if we're talking about Walmart and something happens with that and we use the term it gapped up or gapped down, we take a minute and we explain what that means as we go. So there's always that. But yes, I understand where you're wanting to go with it.
Yeah. But yeah, Halloween coming up. I'm ready for it. I mean,
I will say this year, even all the big companies, they did not buy as many what do you call it, holiday specific items for Halloween. They said that ahead of time. Walmart, Target, and so on and so forth. They were buying less for those holiday specific, and they bought it earlier, much earlier in the year. They put it out earlier, so I feel like it's going to be wrapped up earlier, and then we're going to be pushing right into our Christmas time holiday season, and we're going to get right into that. And I feel like that's going to be pushed up earlier, and they're going to run out of supplies at the end because they're not ordering as much. But they told us this is what they were going to do at the beginning of the year.
And that could be something to keep an eye on too if you're at the grocery store. If they went light on it this year, that might be an indicator of the macroeconomic uncertainty or the economy as a whole. Maybe people just don't have enough money to be spending on holiday supplies this year because they're spending so much money on food and gasoline and stuff.
Yeah, it's definitely going to be interesting because last year when we were in like November, early part of December, everybody was completely bullish on the holiday season. But then as December wrapped up and the numbers actually came out, it turned out that it was a much lower holiday season than what was expected. And a lot of discretionary companies actually missed on their estimates. Yeah. So it's interesting to see that, and if they're going to miss again this year, or if they're actually going to learn from last year and supply correctly this year.
Yeah. We'll see.
Rules. Brandon and I get together 5 to 10 minutes before the show and tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show. Brandon, go ahead and go first like always, man.
All right. So leading up to 4 of the 6 macroeconomic recessions, counting back to 1972, and leading up to the most 3 recent recessions, counting July 1990, March 2021, and December of 2007, the freight economy has entered a recession prior to the rest of the economy. It's been the indicator there. and it's leading the cycles by anywhere between 1 and 21 months. Now, with that being said, the freight economy is generally much more volatile than the rest of the economy. So there's been a lot more freight recessions and trade recessions and such than there has been actual, macroeconomic recessions that have affected the entire economy. With that being said, right now, I think it's safe to say after the last earnings, and Dave, I know you're probably going to disagree with me on this because we talked about this before the show. Global trade seems to be in a free fall. Rodolphe Sad, he's the billionaire chief executive of the French container line CMA CGM. This is the world's third largest container line company. And he said in an interview that he expects weak growth in global trade to continue through 2024. He said most probably 2024 will be pretty much the same as the second half of 23, provided that there's no exceptional crisis. We expect more tension in the months to come. We see that demand is not as strong as it was before, and we see crisis around the world. And this is having an impact on the shipping business. Looking at the combined net profits for all of the container shipping lines in the second quarter, they fell to $8.9 billion, down $54 billion from the industry-wide earnings the same quarter last year. So a $54 billion drop there. And then according to industry analyst John McCowan, the Denmark marine data company, Sea Intelligence, said freight rates are down between 48% to 67% from a year ago. Very large drop. They said the second half of 2023 will be weaker than the first half of the year. Give me 1 second, Dave. And the company faces headwinds through 2024 as ocean carriers deploy a record number of new container ships at a time of geopolitical instability and flagging freight demand. That's from the Wall Street Journal. Go ahead, Dave.
So, I mean, all right. I have a number of questions here, and I don't want to overload you with a bunch of questions, but I'm going to give you a couple. Number one, are they looking at different sectors of the shipping individually, or are they grouping everything as a whole?
It's everything as a whole.
Okay, because here's my next question. With let's take North Atlantic trade, NAT, I believe is the ticker. I could be wrong on that, so don't look that up on me. But they specialize in just shipping oil, and they ship mainly between North America and Europe, which should have gone up, and they should be making money hand over fist right now. So I would be more concerned with companies like Diana Shipping or Tops or Dry Ships or all those other penny stocks that have huge amounts of shipping containers going back and forth throughout the world right now. And you're talking about a decreasing global volume of shipping, and then in what you just read, it's a lot of it's due to geopolitical events based on the article you just read.
Some of
correct?
It. No, some
of it.
No, this
Okay.
has been going on ever since prior to the Israeli situation. It probably coincided with the Ukraine war, but
I mean, Ukraine, yes, with the grain shipping, and this is why I said specifically sectors. Because I believe oil shipping has gone up. I believe those companies who specialize in shipping oil should be maintaining profitability and doing just fine. I think what you're looking at, like here's the thing: we have the news that came out this last week about the trade embargoes from the United States on chips going to China, and how that Nvidia stock took a huge jump one day, huge downturn. And it's a headwind towards Nvidia because now the United States government saying you can't ship this over to China and China can't ship it over here. I can see that as possible reasons why some of the shipping has gone down. You can say that companies, like I just said in our opening here, that some companies are ordering less, and maybe that's why shipping going down. But you see what I'm asking, like, is more the specifics. Like I'm actually giving you ammo right now for your argument with these examples I'm giving you. But there's other areas where I believe that if all shipments are going down, maybe you buy that North Atlantic trade company that ships just oil back and forth because they got to still be doing well.
Depends on what the stock's been doing. Depends on if it's at a value or not. But from what I see, look, 2020, 2021, and 2022, most companies got hit hard with extremely high shipping costs, broken supply chains, bottleneck supply chains. And now that we're seeing the effects of inflation across the board for the past year, companies are really, really, really trying to cut down on expenses. And the first thing that they're cutting down on is their freight expenses. Um, the freight industry did really, really well from 2020 to 2022, incredibly well, way better than it ever has. So that's another reason why you're seeing these kind of jaw-dropping drops right now coming back to normal. But I think we're correcting further, below what the normal levels would be for sure here in freight. Denmark-based AP Moller Maersk in August, they posted their second quarter profit of $2.9 billion. This was down from $10.3 billion the same period last year. Orient Overseas Container Line, they're based out of Hong Kong. They count Costco Shipping Holdings as their customer. They reported an operating profit for the first half of this year of $1.1 billion, down 81% from the same period in 2022. Looking at Union Pacific's, their profits fell 19% in the third quarter to $1.5 billion. They actually beat analysts' expectations on this. This is one of the things I want people to look at too. Look at the year over years on this. Don't just look at the analyst expectations, because if they're beating expectations, but if they're still down 20% year over year, just looking at what they did versus expectations might paint you a rosier picture than what you should be, seeing.
Yeah, because they change the expectations to fit correctly where the stock is performing.
Right.
And that's what you're talking about.
Yeah, quarterly revenue for Union Pacific is $5.94 billion, which was down 10% from $6.57 billion last year. And that was actually below the consensus forecast of $5.96 billion. Convoy, this was big news this past week. Digital freight startup Convoy suspended operations. They're winding down their core business. It's seeking alternatives that may include selling its technology. And Convoy had raised actually $260 million in a funding round last year that valued the business at about $3.8 billion. And they told employees in an email that it would stop accepting shipments until further notice, and that it was rescheduling or canceling existing loads. Its customers have included major companies, including Home Depot, Procter and Gamble, Unilever, and Anheuser-Busch. And they were also backed and invested in by Bill Gates, Jeff Bezos, and former U.S. Vice President Al Gore. They've gone through several rounds of layoffs over the past 18 months. They've cut its workforce down to 500 workers, and it had peaked at 1,500. So, quite a bit.
All right. So, I mean, there's weakness in shipping, right?
Absolutely.
There's a lot of weakness in shipping. I do want to point out the one company I was talking about, just so anyone listening, it is Nordic American Tankers. I got the ticker symbol right. I got the name of the company wrong. The ticker symbol is NAT, but it's Nordic American Tankers, and they specialize in oil tankers. And in fact, their CEO just 2 months ago bought 50,000 more shares of it, just because that's how much that CEO believes in the company. Of his own money, he went ahead and bought that. And they purchased a Suezmax tanker, increasing their fleet by one huge Supermax tanker there. So they are continuing to grow. So it sounds like your companies are laying off versus NAT is continuing to add. So that tells me, again, it's sector specific. So oil is added because oil is high price right now, which also goes into shipping. And this is one of the points I was going to make to you. So I want you to just pay attention, because I want to hear your real response. And I know you have a good one, because you're involved with shipping as your day job right now. The price of oil was not as high as it was about a year or two ago. And the shippers, such as like JB Hunt, or some of these other bigger shippers around here in the United States, could charge a lot more than what they could charge now. Well, the price of oil has not fallen. In fact, it's gone up since then, but yet they have to charge less to be competitive because the market's oversaturated. Now, with companies such as Yellow disappearing, the saturation is going to disappear, and eventually it's going to recirculate back around, and they're going to be charging more again. That's my thought,
So
and I think this is just cyclical.
it is cyclical. Yeah, there's definitely a business cycle here as well. There's a business cycle in every industry. The one thing that I would be concerned about North American trade with oil, we were just talking about last week, the rig count's going down, right? Because the oil companies are becoming more efficient. Well, if that's happening, then what's going to happen to oil shipments?
I mean, they're becoming more efficient, so they're still pumping out the same amount of
Okay,
oil
and
as they
that's a
were
good point.
before with less rigs.
Yeah, it's funny.
So
I guess I kind of answered my question.
and this is so. I mean, if anyone was listening right now ever guessed that we really do not talk about things until the moment, that's evidence
Yeah,
right there that we
yeah,
really don't talk about this until you hear it on
right,
the show.
right. But everything else, as far as shipping goes, the one thing about this, he was talking. You were talking about him buying back shares
Yes,
of his own company.
50,000 shares.
Yeah, okay. So the one thing about the freight industry, okay, spot rates change on a constant basis. So this makes it a very resilient industry, even though we have a situation where freight goes into recession a lot more than the overall economy does, and that it's very volatile. The good thing about the freight industry is that the prices change on the spot. That's why they call them spot rates, right? On a weekly basis, they are different. So the freight industry is very nimble and can change on a dime as far as the pricing goes. So even though they're the first ones to go into recession, they're probably going to be the first ones to come out of it. Okay. And then with the companies that are then paying, trying to cut back on all these expenses um, on freight and stuff. And right now they're using the cheapest carriers that they can possibly find. Eventually, the late orders that show up, claims on loads, things like that, all that stuff's going to start adding up as well. And they're going to say, well, wait a minute, maybe we should start, paying more attention to paying up for better quality freight. And then that's kind of when you're going to see this industry turn around, I think. And I do think you might even see this industry turn around before it's even announced that we're in a recession for the macroeconomic picture. We never really know that we're in a recession until after it's already happened anyways, right? So we just kind of have all these lagging indicators that show up. This is something that's been going on in freight for the past 3 to 6 months, if not longer. It's just now really starting to show up in the data. So buying now, if you find a company that's of good value, and if that guy thinks NAT is a good value, it's probably not a bad idea.
Right. And it did move higher. Not a lot. I wouldn't even call it a gap up, but it did move higher after he made his purchase of those shares. So over the last 2 months.
Yeah.
But it's been a slow move. But I'm just pointing out there are sectors within shipping that if the whole sector drops, there are certain sectors where you could buy in and make swing trades or 6-month trades on and make some money and make some returns here.
Yeah. Yeah, and it's kind of like the whole. Yeah, I agree. Let's look at JP Hunt though. They reported Tuesday, profit tumbled more than 30% in the quarter that ended at September 30th. Revenue fell 18% to $3.16 billion. They missed the $3.17 billion expected by analysts. Operating income in the intermodal businesses for rail, which transports goods by truck and train. JB Hunt's largest business segment that fell 41% to $128 million. Cass Information Systems reported Tuesday in its monthly Cass Freight Index that freight rates across all U.S. domestic trucking and rail networks were down 20% in September from the same month last year. Now, let's move into small parcels because we've covered rail, we've covered full truckloads, we've covered overseas, over air, international shipping. UPS revenue in the second quarter slipped 11% from a year earlier to $22.1 billion, missed the $23 billion consensus. Profit fell 27% to $2.08 billion on a per share basis. Its profit was $2.42 on a per share basis, is what I meant to say there. In the U.S. domestic market, average daily package volume fell 9.9% in June. Internationally, average daily package volume fell 6.6%. So it seems to be that the U.S. freight rates are a little bit worse off than the rest of the globe. But they also reforecast. But go ahead, I'll talk about that after you say what you got to say here.
My question to you on this is FedEx. Do you have FedEx's numbers? Because here's what I do know: FedEx around the country in certain buildings, they shut down the buildings and they put the people what do you call it? Not a layoff, but a man. I need my coffee today. But they told the people, we'll hire you back. You're for rehire, but we just have no need for this building to run right now. And so they actually shut down a couple of buildings. I know around here, the facility in Lebanon, Ohio, was shut down for a short period of time, and the drivers had to pick up, like truck drivers had to pick up work in other areas. I've had a number of ex FedEx truck drivers come by and drop off working for LTL companies, saying that they couldn't get work.
No,
so I wonder. Yeah, and my question is, if FedEx is doing that in order to cut costs and remain profitable, did the revenue drop? Because if the revenue dropped that 20%, but that was what was expected and they beat expectations, but because their bottom line was so good, but I mean, they're taking drastic cuts in order to do so.
Yeah, I don't have FedEx numbers, but I will say that UPS was also dealing with the Teamsters union and renegotiating that contract, so that also weighed on earnings as well.
Which they lost. I wouldn't say they lost, but it was better for the Teamsters than it was for UPS.
Yeah, for sure.
Right, and as someone who was a former Teamster union steward, that was me way back in the day, believe it or not, I was a former Teamster union, right? This is probably the best deal for the Teamsters versus UPS since the one in late 90s.
Okay.
So this is a very good deal for them.
Yeah. They reforecasted their revenue down as well. UPS said revenue this year would be about $93 billion. Earlier this year, they said that they expected 2023 revenue to come in between 97 and $100 billion. They thought at least $97 billion. UPS had generated $100 billion in revenue last year. So
nice.
But expecting 93 billion for this year.
Again, do you believe that it's because companies like Walmart and Target ordered less, and they came out and said they were going to order less because they expected a soft? I'm talking about in the Q1 earnings call, right? All these companies such as Walmart and Target were saying that they're expecting a softer year, and that they were expecting it to be harder later on, because everybody was saying that all 2023. They're saying 2024, it's going to slow down. The economy is going to slow down. So Target and Walmart and all these other, companies went out there and they ordered less supply.
The expectation probably contributed to it, but there's a lot of small and medium-sized businesses that weren't doing that were hoping for growth and didn't get it. Because of inflation, because they're having to pay higher raw material costs, and they got to cut back somewhere.
Gotcha.
Even the ones that are still shipping, the same amount of volume, even the ones that are doing that, they're paying less for it because they can't go any higher with it.
Well, I mean, yeah, and one of the biggest costs to a company is the headcount cost. The overhead cost is employees. This is why you see Amazon. I don't know if you guys have watched videos of this, but I have, and I've shared it with certain individuals of Amazon robots actually doing the work inside an Amazon warehouse. And they're little, they look like the robots. I don't know if anyone listening right now has watched Star Wars Phantom Menace, but they look like those robots from that movie. And they're sitting there moving boxes and packages around. And it's kind of funny to see because they're years away from them actually being practical, right? But the fact that Amazon's willing to spend so much money to develop these tells you where they're planning to go in the future. They're planning to get away from having to hire people to go ahead and run these warehouses. They would rather build these robots out and have them do it.
Yep.
Which, I mean, as a business owner, if I was running the business, I would too. I can't blame him for that.
And it's not just inflation though, but it's also the cost of capital. The cost of taking out a loan right now is just too high.
Oh yeah, the interest rates right now, forget about it. I mean, that's hurting right now. The housing demand. A lot of people took their houses off the market because they couldn't get the price they wanted for, because the buyers weren't there, but that also means you have a lot of commercial investment coming in, not individual buyers, but commercial buyers coming in to buy up houses and then rent them out. And make their income that way. I mean, there's a lot of companies that have switched their gears to do that. I mean, we've talked for years about Zillow. It started doing that years ago, way well ahead of the curve. Zillow would buy up houses and then rent them out using their own app and website to do it, which is very smart of Zillow, very, very smart and efficient by them. But I'm just saying, like, you're going to see a little bit more of that commercial buying and less of the individual in times of higher interest rates. But if you bought a house in the 90s, this is what you actually paid for. You got a higher interest rate then too. So
yeah. All right. So for this coming week, lots of news coming out, lots of earnings, lots of data. So expect a lot of volatility here. Here's just a little bit of brief. I think it's 2/3 of the S&P 500 reporting in the next week, which is crazy amount. Monday, Cleveland Cliffs reports. Then you have Microsoft and Google, and on Tuesday, or Alphabet, whatever you want to call them. And then Meta Platforms on Wednesday, Amazon on Thursday. You've also got Coca-Cola, General Electric, General Motors, Nextra Energy, Spotify, Verizon, Visa, Chipotle, Comcast, Ford Motor, Intel, Merck, Newmont, Southwest Airlines.
so we're just doing an earnings recap on our next show is what you're saying, right? It's just an earnings recap. That's all we're going to do.
Charter Communications, Chevron, ExxonMobil.
So here's my highlights. Here's the ones I'm looking for this week, and then you can share yours. The ones I'm looking for are definitely Ford Motors. I want to see what they're going to say. I want to see GM, what they're going to say, and what they're going to say in regards to the strike, because they have to say something about it. Right. They have to have a comment. They can't just report their earnings and not have a comment on it. You got to say how it's affecting your overhead, how it's affecting your bottom line, your revenue. So I'm looking forward to that right there. And then I'm also looking forward to what Alphabet has to say and Microsoft and Meta about AI. And what's the update on that? Are you guys actually making money off of AI yet? Or are we still implementing it and trying to build out systems in order to make money here? Are we actually using it consistently on a daily basis? Where we're at with it? What's going on? And I want to know Meta on pre-sales of their new Oculus headset, because I am a VR fan and I'm going to be ordering one. But I also want to see that number. Like, are they seeing a lot of demand for that, or is it very little demand? And is it going to fall flat on them?
I don't know if we might not have that answer yet. Right.
I mean, it's pre-orders, right? Because they actually don't go on sale till, I believe is it December?
I think so.
November, December, but you can have pre-orders. The pre-order number should be in for the new Meta Quest headset. And I know I have one, but I have lots of VR stuff. You come to my house, I have a VR, this, that, and the other. So there's not a lot of me out there. I want to see. I know, right? I want to see, is there like, I want to see numbers in the millions of pre-orders for the new Meta headset.
Yeah, I would like to see that too. I don't, with the AI and the metaverse, I don't know.
I'm telling you, if you could get our TikTok followers up to 10,000, I will give away a Meta headset to somebody.
Okay.
Right here on the show, October 22nd, by the end of this year. So by New Year's Eve, 10,000 followers on TikTok, I will give away a Meta headset to someone.
You heard it. Do it. All right. Economic data highlights of the week. This is going to be including the Bureau of Economic Analysis advanced estimate of third quarter gross domestic profit on Thursday. On average, economists are seeing a 3.6% real growth rate in the same period, that seems high to me, but I guess we'll find out. And that was versus 2.1% in the second quarter. So that is quite the jump there. On Friday, the Bureau of Labor Statistics, will release the Personal Consumption Expenditures Price Index for September. This is the PCE, if you ever hear of that. That's the Fed's preferred inflation gauge there. It does not include food and energy. But they're forecasting it to be up 3.7% from a year earlier, and that's slower than August's 3.9%. I think anything just below 3.7% would be bullish for the market.
I agree. I agree. I would love to see a bigger drop so that we can come to an end of these Fed rate hikes. And I think we need to continue with QE tightening. That needs to continue until the balance sheet is at zero.
Right.
But the rate hikes can go away. That would be nice for the markets.
It's still such a frustrating period though, because the tightening is what's really kind of breaking the market gauges. So you're seeing the treasuries go up. I think the 10-year just topped 5% or something like that, something crazy high like that. And those are going up because the Federal Reserve is offloading those treasuries into the market. It's not because people are expecting 5% inflation. It's because the Federal Reserve is offloading it, that, and what that's doing is driving the treasury prices down and the yields higher. At least I hope people aren't expecting 5% inflation. If you look at the 1970s, though, inflation was actually pretty volatile. Like there was one year there where it was 4% before it jumped back up to 10, 11, 12, and 13%. So I hope we're not heading in that direction. But it just seems to me like the gauge for the stock market that people often use is that 10-year treasury and the 30-year. And they're off the chain right now. They have started the show.
I have a good moment right now where you can explain, since you are the Baron of bonds, if you can explain to everybody how me selling my 10-year bonds is causing the 10-year interest rate to go up.
Because what happens is, as the demand for bonds fall, the interest rate goes up higher in order to try to seduce buyers. So, if nobody's wanting to buy it at 4%, then maybe it goes up to 4.1%, 4.2%, and such, until somebody steps in and says, okay, this is actually a pretty good yield for me. I'll step in and take it.
There you go. Good explanation from the Baron of Bonds himself. Nice. All right. So it's my turn right now, right? Yeah. All right, cool. Because I have a couple things, and they are both tech related. One thing I want to talk about is Tesla. They had earnings this past week. I'm not going to delve too much into the earnings. We're going to cover a couple of what were quote unquote weak points, which was China demand was down, right? So how do you sell more cars in China when it's cheaper to make a Baidu car there than it is a Tesla, right? Of course. And Tesla has to continue to keep that China demand strong, but also keep the U.S. base strong. That was one headwind they had there. Another headwind that they had to do with the robotaxis. They got flack for the robotaxis not keeping up with Waymo and other ones in the United States. Waymo, of course, is leading the way in the United States. Tesla has not kept up with them. However, I believe it's because Tesla's looking forward with AI going into working with their AV system, the autonomous vehicle system, the way it works. They're using it to find a cheaper way to make it, which has always been Tesla's bread and butter. So Tesla is able to stay very ultra competitive because they continue to make cars cheaper than anybody else in the market right now. So Tesla's able to give you a $30,000 car and still be profitable versus Ford, GM, or any of these other car makers. If they were to do that, they'd be losing money. So that's their bread and butter. Right now, we spoke about the robo-taxis. We spoke about the China demand. We spoke about the headwinds, the reasons why the Tesla stock took a dip, right? This is why they took a hit come earnings. However, Elon Musk was very optimistic. I look at Elon Musk, and whenever he talks on his earnings, I see him as a straight shooter, right? He's not going to be always optimistic if he's not optimistic. He's gone on X before and has said things like, hey, I think we're going to be slower right now. I don't think we're going to have a good quarter. I think we're going to probably lose money. So he's been very honest about what he feels and what he thinks about the company. And for him to come out and say that he's not concerned about these headwinds, and he points to some of the good things that Tesla's doing, and he's saying, look, we're going to be just fine. We're going to continue moving forward. To me, that gives me a stronger confidence in that this is a time to buy off the dip. I was already buying Tesla anyways. Gives me a time to move in, probably with more than what I was planning on buying, because I had this weekly buying program I was doing. I could probably go in 2 weeks at once right now and grab it on the cheap, which is what I actually did last week. Now, given that means I have to hold a little bit longer here, because I don't want to go in all at once, because everyone's talking about after the student loan program and everything else happens and credit cards start to topple, when a firm starts, people can't pay their firm bill anymore. Come January, February, we're going to have a downturn in the economy, and 2024 is going to be this awful, horrendous recession. I don't think it's going to be that bad, but that's only if those things happen. If those things don't happen, you're going to have a soft landing, and that is what I'm looking for. So I think Tesla, either way, is a good buy. If the recession does happen in January and February, starting then in January and February, Tesla still goes down a little bit, but you hold it because it's a good company, and this is a long-term investment for me. I believe in the hold of Tesla. Go ahead.
No CEO worth their weight's ever going to throw in the towel because of a pending recession. They might, pull back in the reins a little bit and stuff like that, but the long-term plans, long-term goals are going to remain the same.
Exactly. And that's why Elon came. He wasn't concerned. He understands the headwinds. He acknowledged the headwinds. He said, these are, some headwinds for us, but I'm not concerned. I'm looking toward the future here with Tesla, and we're going to continue moving forward. And so for me, as a long-term investment holder, I like to hear that. I like to see the news on that. I like the AI with the AV. AV, if you guys don't know what I'm talking about, autonomous vehicle system that Tesla is building is going to be built to where, like Waymo right now, let's say that it takes Alphabet $10,000 to build that AV system for their cars, right?
Right.
Well, then Tesla, with the AI version that they're working on, is going to be able to come in and build it for $2,000. And that's why I was saying this is Tesla's bread and butter, building things cheaper, faster, quicker, and better than their competitors, so that they can sell that vehicle at a lower cost, but yet still be profitable versus the other companies cannot. That's what I'm talking about, Tesla. And that's why Tesla's a buy.
Okay.
All right. So that was Tesla. Now I give you one headline today, Brandon, one headline. That's all I got for you, because I have I got a little bit after this, and you already know what's coming after this. So your headline, this was on CNBC, came out today, October 22nd, 8 a.m. by Sean Baldwin, right? So it's mainly a video. You could go on there and watch the video, but there is a little bit to the article as well. And the headline is How Walmart Became America's Largest Grocer. So this in the small little bit of article here, it talks about how Walmart has been taking advantage of the higher inflation over the past couple of years and really honed in on offering the same food at a lower cost. They've been bringing in the middle class, the 100,000 plus six-figure income people have been coming into Walmart to shop. They've really been doing a good job of pulling in more people in to come in there and save a little bit of money there. So you get a mixed bag when you walk into Walmart now as a customer, as far as your peers walking around with you. Now, what they said here, and this is the managing director of consumer and retail at Key Bank Capital Markets. He said, when we think about grocery landscape over the next 5 and 10 years, we see increasingly middle America and affluent America shifting some of their shopping basket over to Walmart. Again, the article goes into its inflation as what drove people into shopping at Walmart, and that Walmart's taking advantage of these times to continue to grow to become the largest grocer. Thoughts on Walmart, Brandon?
Well, continue to be the largest grocer. They've done an incredible job ever since their inception of taking over and then staving off the competition from Amazon. And then you really saw, last year and then even now going into this year, the split off between them and Target, and how much better Walmart, I think, is doing than Target is at maintaining margins and maintaining revenue. I just don't think 30 times earnings makes any sense for it, though.
Yeah, I did not see that. Yeah, they are 30 times, really? Wow. Okay. I mean, yeah, that's hard. That's hard to justify, even if you include a little bit more growth, like this KeyBank market capitalist analyst was saying. That's a lot of titles. That there's more growth coming for Walmart in the grocery area. I don't think it's going to equal 30 times for that. But I have always said that if I'm going to buy any one of these any retailer right now, it would be a Walmart, and I still maintain that. But I'm not going to buy Walmart. Just put that out there. But
Yeah.
if I had to, that would be the one I would buy.
So great company, love the company, just don't care that much for the stock price right now. Definitely keep it on the watch list and wait for it to come down a little bit, maybe 20 times earnings. But that's a pretty big shave off. That's, a third of the stock price. Unless earnings do increase drastically over the next year.
Yep. Yep. All right, time to go into my last piece here. And I know between the two of us, between Brandon and myself, I am probably the one who has covered this sector of the market more than Brandon has by a long shot, I would say. I even and what I'm going to talk about is crypto and Bitcoin right now. But I know there was a time I did the whole crypto.com when it came out, and I created a username, and I let all of you listeners know, okay, this is how it's going. I invested the way crypto.com told me to. I ended up making money, but it wasn't much. It was like I could do better than this in a week than what they gave me in 3 months. But I mean, I made money. But anyways, so Bitcoin, right? Bitcoin. This is an article, and it actually came out on Friday. It was Friday at 12:45 a.m. early. Bazinga, and the title is "Why is Bitcoin surging beyond 29,000 today?" So in the article, it gives you some reasons as why they believe Bitcoin was going up. It talks about Fed Jerome Powell acknowledging persistence level of elevated inflation levels, expressed the need for lower economic growth to address the issue. They quote Powell some more in here as to why this could be affecting Bitcoin. They also talk about the Bitcoin ETS finally being approved, and it could be happening sometime in November is what they're looking at. And so these ETFs are going to come out, and so the Bitcoin is going to start going up in value because these ETFs are getting ready to come out and be available to be invested in. But on here, there's also a couple lines I want to read. It says on the liquidation side, out of a total of 25 million in liquidations that occurred in the last 24 hours, over 20 million worth of Bitcoin shorts was liquidated. So it was very interesting as to why it jumped so much at one time in just one day there. You shorts disappearing like that, that's kind of a lot in one day, but it goes to show that a lot of people are starting to become bullish, and I think it has to do a lot with the ETFs, but also something else I'm going to talk about here in a minute. But Brandon, first initial thoughts?
Does the ETF make it that much more? I mean, I know that it's going to provide more liquidity and stuff like that, but does it actually like add to the initial value of Bitcoin altogether? And my problem with it is that it's very hard to actually value Bitcoin when it's not widely used as an exchange yet, as far as buying, actual physical products with. Not widely. It's used, but not widely.
I was about to interrupt you. I was like, yeah, it's being used a lot more than what it was even just like 4 years ago. 4 years ago to today, it's used a lot more places you can use Bitcoin, and they're accepted. But yes, I was, as far as like being used like you would a dollar. Yeah, no, it's not quite there yet. So what a big event that's going to happen next year, and they call it's Bitcoin halving. Having. We're Bitcoin halves. So what that means is, for anyone who's listening, it's like, what is David talking about right here? So how Bitcoin miners work is Bitcoin miners have to they it's just so confusing to start from the beginning and try to explain this, but I'm going to try to do it as quickly as I possibly can. So a Bitcoin node. So if I have a couple computers I want to set up, and you set up a node here, it has to have a complete history of transactions that have occurred on the network. Now they don't have the complete transaction. They break them down to just a few ones and zeros here, right? But they need to have that so that going forward they can mine certain nodes and make sure that these are legitimate and that the Bitcoin network is secure. It's called Bitcoin mining. It's not actually mining. That's just a term that they use to create this. Bitcoin halving happens about on average every 4 years, and it's where the reward for mining Bitcoins gets cut in half, right? So the current reward, I believe, is 12.5. And so the new reward is going to be, oh, no, I'm sorry. The current reward is 6.25. And the new reward is going to be 3.125. So for every time a Bitcoin block gets solved, and the miner that solved it is going to receive 3.125 Bitcoins for doing that work and keeping the security of the Bitcoin network intact. What this also means is now there's going to be fewer Bitcoins being produced every single year. And so anytime that the amount of supply gets cut on any particular product, what happens to the price? Price typically goes up. And this is what you also see every single time Bitcoin halves is, the price will typically go up because there's fewer of it being pushed out there into the world. And this is what everybody's looking forward to next year. And this is why the ETFs are very important that they go ahead and get created and approved this year ahead of the halving event. And I think we're going to see a jump in Bitcoin unless, and here's my caveat to this again, is unless the US jumps into recession and all those things I talked about actually do happen that cause a recession, that would keep the price of Bitcoin lower. But if those things don't happen, or not all of them happen, you're going to see the Bitcoin price go up. But you're also going to see some miners fail to exist because they are no longer going to be able to continue run these big, huge machineries and mine Bitcoin because they're getting fewer of them. So you're going to see definitely some consolidation in the Bitcoin mining sector. You're going to see a number of companies disappear. One of the companies I've traded before is Riot Blockchain. I don't know how they're set up, and I don't know if they're going to be able to continue running after it halves. I have to look into. I'm not saying they won't. I'm not saying they can't. I would have to look into it and look into the numbers to be able to make a call that. But I want to put that out there as, hey, if you know some of these miners, take a look at it. See how much it's costing them to run these machines and the reward aspect. And then at its current price of Bitcoin, is it still profitable for these miners to continue to exist? Because if not, then you could short sell them now.
Right.
Thoughts, Brandon, on all the information I just gave you, and I know you didn't know all of that. You knew some of it, but not all of that until just now.
Don't I don't know enough about how that operates to be able to make a call one way or the other. I can say this, I understand how Bitcoin is supposed to go up in value and what it's supposed to correlate with. And it seems like it's starting to move in that direction, right? Like if the stock market looks like it's about to fail, or if it looks like we're about to go into a recession and such, Bitcoin should technically go up along with gold. And the thesis for the Bitcoin bulls is that Bitcoin can outperform gold. But it still moves in ways to me that are counter intuitive oftentimes. And then also, looking back at the history of inflation, I think the consensus right now is that inflation's coming down and that we're probably not going to see 7 to 8% inflation again. Look at the 1970s, though. It went down and came back up and went down and then came back up and then eventually topped out at like 11 or 12% or whatever it was. Somewhere in the early 1970s when inflation started to pick up around 7 to 8%, it came back down to 4% again and then went right back up again. So I don't know what's going to happen when it comes to inflation. This is just it's too uncertain to me.
I get that it's uncertain and you don't quite understand it.
It's not that I don't understand it. It's just that like there's too many what ifs. You know what I mean?
Okay. All right. Too many questions that aren't you can't see clearly enough to make a confident decision and say
Right.
buy. And I
Exactly.
get that. And here's my thing. I want to say I see Bitcoin going up with my caveats. I see them going up, but I've always pushed in the past that you could buy these miners and they'll go up even more. Like Bitcoin goes up 5%, they go up 15%. My caution now is don't do that with the miners to anybody listening, because the miners might be falling off after Bitcoin halves. Bitcoin, I believe, should go up given everything I just said. The ETS is going to create much more volume going in money wise.
Yeah.
People are going to be buying these ETFs, investing with them. I think it's going to be a great opportunity for Bitcoin. I don't look at all the cryptocurrencies following suit. A lot of them have disappeared over the past year, which is good. I've called for consolidation in this industry. They needed it. And I get your concerns. I do. And it's not for everyone, you know.
My assumption too with Bitcoin coming back up in price, I wonder how much the troubles with the regional banks added to that.
I
As
mean,
well.
that could have added too. But I mean, gold went up over 2,000 this week.
I know, and I think that was probably part of the reason for that as well.
Is that Bitcoin's moving with gold? Is what you're saying?
Yeah, I think it's part of it. I think the ETF is probably most of it, but I think part of it is that as well.
Okay. All right, man. Well, there you go. That is what I had. Let's go into final thoughts. Final thought, Brandon.
Well, first of all, I want to say that theoretically, I support Bitcoin. I love the decentralized nature of it. So I'm not a bear. I'm not a bear on it whatsoever. I just don't know, enough. It's hard right now with it not being traded as a currency on a wide basis to be able to value something like that for me.
Gotcha.
Final thought here. I'm going to go off in a little bit of a different direction. I want people to put General Dynamics on their watch list. They produced the M1 Abrams tank. They also have the Stryker armored fighting vehicle. They're also a finalist to build a replacement for the M2 Bradley. I think you need to keep an eye on this. Dave, I think you would say to probably, like, you could probably dip into it right now even. I don't want people to go just jump into the defense sector because there's geopolitical uncertainty. A lot of these governments and militaries, they buy their products way in advance before it's being used. So, one or two geopolitical events may not even move the needle on it. But I do think that defense spending is probably going to go higher. I don't see a way that doesn't happen. So I think, with geopolitical events being the way that they are, the defense sector, a lot of people kind of jumped in, and I know Lockheed Martin had a gap up over the week, looking for, defense, not just in the defensive sector, but defense in their portfolio as well. But I think people at least need to keep an eye on it. If we have another shutdown scare, I think the November 17th is the deadline to pass another government funding bill. If we have another scare there, I definitely think that, you should be eyeing this to potentially buy it if it comes down in price.
There you go, man. Brandon and I, and so Brandon brought this up before the show. He might mention this, and I quickly, and I shouldn't have did this because it goes against our rules, but I said, well, what about Raytheon? And because every time a Tomahawk missile is fired, it's like another 30 million going to Raytheon or something like that. And you did mention that Raytheon is impacted by Boeing, and that they're intertwined, and Boeing's failings in their supply chains have affected Raytheon stock.
Yeah.
Correct? Am I quoting you right?
Yeah. So, and that's one of the reasons why before I traded defense, I traded Lockheed instead of Raytheon, because Lockheed has less exposure to Boeing.
Gotcha. But Raytheon makes all those cool little missiles, man. I'm telling you. So every time they're fired, they got to get happy because they got to replace those. My final thought is, looking in this week, there's earnings everywhere. Like we said in the show, earnings everywhere. This is a day trader's dream week. My personal goal for this week, is to come out of here making at least 5% on every day trade I make this week, because I'll be making a lot with these earnings coming out, and I'm hoping to really churn and burn. Now, I do give this caveat and warning. This is a warning to all you new investors out here. I have been doing this for close to 20 years, not quite 20 years yet, but close to 20 years. I have a lot of years of experience doing this. If you're going to go into earnings week and want to day trade that, every single day, day in, day out, most people do not do well.
Yeah.
I just will put that out there. They
right,
do
because
not
they
do
make
well.
irrational decisions.
Yeah. They're not using disciplined approach, actually valuing companies correctly, looking at the value, looking at the different indicators, such as a PE ratio, where's that at, and combining all these different indicators together to say, all right, this one's undervalued. I'm going to buy it right now. It's going to jump because of XYZ reason. So, I mean, I've been doing this for a long time. I can't call these right now because they're going to be day trades for me. So I will call them the day of, and I may even there's an Instagram post I did, and it's still up there. You can see an Instagram post where I said to buy something that morning, and then in the comments below it, I put in, all right, get ready to sell this, and then boom, I sold it, and it was all within like hours, and I made 10%. But you can, I post sometimes those on Instagram, so that might be the channel I use if I'm going to post about a day trade this week. So keep an eye out for that. But lots of earnings, lots of opportunities to learn. Even if you don't trade this week or invest, it's a good opportunity to watch what moves the markets and learn from it. So going into the next time.
Dude, let me add to that real quick. If you're an investor, do not make rash emotion-based decisions. Look, I started dipping into Meta right before its largest one-day drop in its history. So, but I didn't sell because my thesis for Meta had not changed, and I've doubled my money on it now. So everybody else is going to be making rash, irrational decisions. If you've got money on the sideline, you could probably capitalize on it if somebody oversells a stock, so let everybody else make those terrible decisions. Sometimes it pays, though, just to sit on your hands and do nothing.
Yep, I would 100% back that up. Nice. All right. So if you're listening to us, hopefully you learned something tonight, and hopefully you had a good educational experience. Because as always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Have a good night.